Hello, everybody. Welcome to De Niro Trades. This is your host, G. De Niro, and we are here today talking about earnings option straddles. February 18th, 2018, I'm going to walk you through a trade that I put on and closed last week. Going to recommend, or at least tell you about a trade that I'm going to put on in this coming week and let you know the mechanics of the trade, the rules of the trading strategy, and let's just get into it. All right, a brief introduction. The objective here, number one, is to dumb down an options trade technique. I realize that options can be overwhelming for many, and probably for good reason. It doesn't mean that you can't play an effective options trading strategy without knowing any and everything about the options market. So we're going to talk about an opportunity to do that today. I want to minimize in-market risk. I'd like to have my capital in the market for as minimal of a time period as possible, and that's exactly what this trading strategy does. I want to remove directional risk. We spend so much time in today's day and age, or really any stock market day and age, to try to guess which direction the market's going to go or a particular ticker is going to go, up or down. You need to know. In this particular strategy, not so important. It just needs to do one thing or the other. Then I want to remove emotion by introducing a straightforward plan, something you just stick with and stick to your knitting, so to speak. You just get it done regardless of what happens. There's a dramatic increase in your chances for success when you do something like this. And then why am I doing this? Well, really just to keep myself accountable. And it would be cool to build a community as well, to have other folks who are implementing these trades, throwing out some new ideas. But even if that doesn't really happen, putting this up for the world to see before I put the trade on, talking about what I did, and then coming back, right or wrong, good or bad, win or lose, and going over it with a post-analysis will only help my personal trading strategy. But obviously I hope it will help yours as well. Before I get too into the weeds, I just want to briefly talk about this, specifically what is a straddle. I don't want to, nor do we have the time, nor do I have the resources to give you an effective education on options. There is just a ton of wonderful material out there on the web to get you up to speed on options. One place where you can go for options or really anything investing is Investopedia, where I borrowed this from, and perhaps you've read this while I've been talking. I'm not going to read it word for word, but the bottom line is that a straddle is an option strategy where you don't have to take a particular bet on the direction of the marketplace. You just have to have there be a move that's made one way or the other, preferably a dramatic move, in order to win. All right, let me get into the trading rules of this particular strategy. First and foremost, we're going to target tickers with upcoming earnings. That's fairly self-explanatory based on the title of the presentation. We want to target options that have an expiration date of approximately 30 days after the date of the earnings release. We don't want to hold on to our options for too long, otherwise they will decay, and that's not good for option holders. It's great for option sellers, but in this particular strategy, we are the owners of the options. We want to target high volatility tickers, those with a history of earnings volatility. I'm going to show you a graph in a moment, or a chart in a moment. Just because they have a history of earnings volatility doesn't necessarily mean that they will have that same volatility in the future, but our studies have shown that more often than not they will. We want to target options with an open interest of at least 100. This is an indicator of your ability to be able to sell this on the open market later. If nobody else wants to buy it, well, you don't want to be trying to sell something that nobody else wants to buy. So ideally, we're looking for an OI of at least 100. Execute the trade no more than 3 days prior to earnings. That is, buy the call and the put, buy the straddle, at least 3 days before earnings. And then you want to exit the trade, win or lose, on the first trading day after the earnings announcement. The only exception to this, I'm going to walk through an exception, is when you have a winning trade and you want to hold on to it just to see if something reverses. But in order to stick to the plan here, win or lose, get out. You don't want this the options value to decay on you. You want to get in and out take your loss if that's what it is, or take your chips off the table and move on, put into the next trade. Advanced trading rules. First one here is to find a ticker that exhibits a favorable chart pattern. Now, I realize that options can be complex, so too are chart patterns. You don't need to have a vast understanding of chart patterns in order to do this. And like I said, this is an advanced rule. But hey, if you find something that meets all of the rules that I specified earlier, and it has a favorable chart pattern, things are looking up for you. And then finding tickers whose options are not overpriced. I'm going to show you a scan that we have that shows you if the option is overpriced or not. And again, as the buyer of an option, if you can purchase something which is not overpriced, that's a good deal. Now, the fact of the matter is that leading up to earnings, more often than not, the options are going to be overpriced. However, if you can find a few winning ideas that meet all the other characteristics and are not overpriced, you're really increasing your chances for success. Okay, so this is the trade of the week. Last week I wanted to go through the results. This is the first video I've ever done for this particular channel here, so I didn't get into how the trade was put together, but that will be happening in the future weeks. At any rate, this was TripAdvisor. Total cost $660. You can see right here it's a straddle. That means we purchased one call and one put. Execution or the strike price exactly the same, $37. The date of expiration exactly the same, March 16th. We purchased it for, if you don't know options, then basically one option is representative of 100 shares of the stock. So accordingly, you can multiply 100 times that 357 that you see there and 100 times the 303, and you're going to get up to about that $660. All right, let me get into how we came to pick this particular ticker in the first place. And all right, TripAdvisor. First and foremost, as you can see, I don't know if I'm talking to a lot of chartists here or not. Whether you are or not, I think it doesn't take an expert eye to see that this is a volatile ticker. It likes to go up and down and all over the place, and that's exactly what we want for this particular strategy. Furthermore, you want to eyeball the past earnings. Now, past results are not always indicative of future, but still, we have seen that, hey, if you got something that every earnings, it jumps in a big way, then that's a pretty good thing. It's a pretty good sign for what might be happening on the earnings that you're looking to buy near. So briefly looking at this, you can see earnings date, big jump the next day. Earnings date, big jump the next day. Earnings date. This time, not the next day, but there was a pretty significant move. Oh, maybe I was looking at this wrong. Yeah, no, significant move the next day. Same thing. This one is probably the biggest to date. I'm not going to go through and look at the percentages, but you can see that it's pretty big. And then this just happened. Sold this on Valentine's Day, bought this on Valentine's Day, and earnings, I bought this like 2 days prior to Valentine's Day. Valentine's Day was when the earnings were released, after market, and boom, went way up, I think, and aftermarket was up as much as 22%. So let me get into what happened. I think you saw it briefly, but let's get back into it. So that was the purchase. We've been through that. Here are the results. Realized gain, as I said here, so far, $594. We purchased it for $600. The net amount received in this particular instance, $954. So the reason why this is not accurate, and the reason why I say so far, is because as you can see here, I only sold the call. This is not recognizing the put, but we'll talk about what would happen if I did recognize the put. Okay, so I'm still holding the put. You can see this is almost 100% loss. The value is only $22. So essentially, let's write this off. Let's take the $303 that was purchased, or that was spent to purchase that put, and take the profit. This is the profit that came from just the call side. Subtract this loss, get 291 bucks. Initial investment of 660. It's a 44% ROI, which is very strong, especially when you consider the fact that I'd only held it for a couple days. Hell, if I'd held this all year and I had a 44% ROI, find a money manager that can deliver you that, and I'd be happy to go talk to him. Actually, I wouldn't, because I like doing my own stuff. But anyway, I think you get the point. All right, if I sold this put today and I had an extra 22 bucks, then obviously the ROI goes up a little bit. I decided to just hold on to it and write this off because I figured 44%, I'll take it. It's pretty good. And if something crazy happens in the market or happens to this ticker, even though it just went up and then starts going down, well, hey, there'll be extra profit. So that's kind of my perspective. For the most part, as I said earlier, the rule should be you exit the trade on the day of earnings after you see the swing. Hopefully you did see a big swing. Even if you didn't, and we're definitely going to be going over some instances where we didn't profit, not in this case. And so anyway, if you sell on that day of earnings, then you just close out entirely. This one I'm just holding onto almost kind of like a lottery ticket, but I'm probably going to sell it when trading resumes on Tuesday, just because, as we already discussed, each day that goes by is reducing the value of that option. It's decaying. Alrighty, let's get into the trade of this coming week. So now you get to hold me accountable for something that hasn't really happened yet, other than the fact that I've already spent $1,200 on this. Purchased, and this time I upped it a little bit, bought 3 calls, 3 puts. You can see the price they were both executed for, approximately 408. Quick math, 408 times 100 times 3. That's how you get to your 1221 in expense. Let's go to the chart, take a look at why I decided to put this particular trade on. Alright, Apache. I have no idea what these guys do, and I love that about this particular strategy. You don't need to know. You need to look at this particular chart and see if you're dealing with something which is wild, which is definitely the case here. We're looking at a wild ticker, which is what I like. Go back again, real down and dirty, look at your earnings, see what happens. Not earth-shattering, the movement in that case. Here, it was a decent move. Here, pretty decent move on earnings. Doesn't look to be major on earnings, and we'll see what happens on the 22nd. So in this particular scenario, I think I see an inverted scallop here, which is a bullish trading pattern. Hopefully I got that one right. At any rate, I'm not expecting the average viewer here to really even need to know that. If you want to know chart patterns, I highly encourage you to go learn them, because it's a ton of fun and it can give you a major leg up on the market. But we'll see if this comes true. If this would come true, then I would anticipate that on earnings we're going to see the spike we're going to see is going to be to the upside, to the call. But time will tell. Alright, so check back next week and we'll see how we did here. Just to wrap up, follow the YouTube channel. This is literally the first video that I'm posting up to the channel, so the channel does not consist of much, but follow it, and hopefully it will soon. You can follow me on Twitter. I literally opened that Twitter account a couple days ago. If you see something here that you like, tell your buddies, and give me feedback. Like I said, brand new, just putting this out there. If we can build a community, that's cool. If not, keep me accountable. Hopefully you're going to see a bunch of winning trades here, and if you want to participate, God love you. Hopefully you can win as well.